This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on January the 17th, 2014. Our time is 8:49 in the morning Mountain. Our radio show runs on your favorite radio stations. The shows are streaming and archived at HESradio.com and rarecoloreddiamonds.com. We have a podcast as well. That podcast is through iTunes. Go to iTunes and put it right on your portable device. The show is portable. We go anywhere you do. Harold does daily market commentary. You can find it on his websites. You can also find it on the podcast site as well. And an announcement, some good news. In Edmonton, we are on 630 CHED, and starting on February the 1st, we are going to be moving from Sunday at 3 o'clock to Saturday at 3, a new time starting at the beginning of February 1st, Saturday at 3, we're moving from Sunday. And don't forget, Harold has an auction coming up, hsfineauctions.com. There's an auction coming up February the 5th, 8 Eastern, 6 Mountain. We'll talk about the catalog later in the show. As we start today's show, the Senate and the House in the United States voted, and they have a budget in place, $1.1 trillion budget through to September 30th. And there are midterm elections, so there are a lot of scared politicians in Washington, in the United States. Also, coming out this week, China has U.S. Treasury holdings, and they hit a record of $1.317 trillion in November. The Chinese definitely manipulating their currency. Also, Christine Lagarde, the head of the IMF, came out and said, we need to fight deflation, the ogre, very decisively. She's very concerned about deflation, which is even worse than inflation. That was one of the top stories this week. And Harold, that is getting to be a concern. So if you think the money printing they're doing now is very, very strong, as we saw in Japan back in the 80s when they were fighting deflation, the printing presses really have to go into overdrive to fight deflation. And one thing we should mention, the reason gold does well, inflation or deflation, is it maintains its value, its wealth, its currency, and it maintains it in either deflation or inflation, which is a positive for both if you're investing in hard assets.
You bet it is, Randy. Again, I know that's a little bit confusing because we've been talking about inflation for all this time. And again, even over the short term, if we do see deflation, which is a drop in prices, which again is concerning to the government, obviously, the fact is that what has been done by the Federal Reserve over the past 5 or 6 years is still definitely inflationary. So eventually they're going to have to raise interest rates, and by raising interest rates, that's what they actually do to curb inflation. Obviously, going back into the late 70s, early 80s, when we saw massive inflation back in 1979 and 80, when inflation went into the double digits, and basically the way that they fought it was by raising interest rates. However, inflation was so severe back then that they had to raise interest rates up to over 20%. And obviously 20% interest rates can destroy the economy also. 20% interest rates makes it almost impossible to buy real estate, and it would kill the stock market. So again, it's going to be very interesting to see how the government and the Federal Reserve is going to get out of the situation that they're in right now. As they're sitting right now with interest rates basically sitting at zero and printing as much money as they need to print to, keep everything going, they're almost in a comfort level. The stock market is still holding up there, and basically they don't have to do anything. They're going to try to start to taper, but as they start to taper and taper a little bit more, they're going to find that unwinding the situations that they're in are going to be very, very concerning and very dangerous. I've mentioned, pretty well every single week for the last several months where the real problem is going to lie, and that's going to lie in the derivatives market. It's unregulated. It's in the quadrillions of dollars. Most investors don't understand how they work, and when they start to unwind these derivatives, I believe there's going to be massive, massive problems in the market. The thing is that the Dow has rallied, from basically, 6,800, 7,000 back in 2008, in 2009 when the markets plummeted, and is basically sitting at 16,000. However, a lot of people have still not made money in the markets. I speak to my clients with their RSPs all the time, and still most people are upside down on their RSPs. So go figure that one out. How does the market pretty well double, and you're still having problems making money in that market? So I'm not a big fan of the stock market at this point here. I'm not a big fan of manipulated markets. And again, these markets will always come back and do what they're going to do, when the markets are set straight. So there's just no doubt in my mind that we're heading into a very, very dangerous time again. The stock market is in a bubble. The prices are ridiculously high, especially when there's no fundamentals backing them up. If you're looking at what's happening in the retail markets right now, there's several major chains that are closing down many of their stores because the retail market is not doing well. So basically that means letting go a lot of people, closing down stores. And if the retail market is a bad market at this point, it means that this is going to be almost the norm. You're going to see lots of major companies like Macy's and JCPenney and all these major chains, retail chains, closing down stores because they're just not hitting their numbers. And what it also means is letting go a tremendous amount, thousands and thousands of employees. So you look at the unemployment numbers, and you look at them last week, and they created a piddly number of jobs, most of them part-time jobs and jobs that are just not high-paying jobs. And basically they dropped the unemployment rate from 7%, which it was a fictitious number in the first place, down to 6.8%. Again, it just doesn't make any sense. The numbers just don't add up. And add that to the fact that Obamacare is going to cripple the market, because any corporation that has over 100 employees is really going to bite the bullet, because they have to pay the additional insurance costs. That's why you're going to see another downturn in the economy, due to the fact that a lot of these corporations will let go full-time employees that are non-essential, and they'll basically hire them back as part-time employees. And basically that's going to hurt the economy, because when people aren't making money and when they're not working, they're not spending any money. That's why the retail trade is not doing well at this point. So there's a lot of problems on the horizon. There's the derivatives market. There's the fact that the stock market is in a phony rally. The U.S. economy has not rallied enough in order to warrant 16,500 in the Dow. Again, we know why that has happened. We know that it's imperative to the government that they get the stock market and Wall Street back on track, but it should be doing on its own merit, not the way it's happening at this point, which again is being forced to do that by quantitative easing. So once the market starts to trade on its own merits, you're going to find where this market really is going to be, and that's going to be below the 10,000 level. So again, at this point, if you're sitting heavily in the stock market, be careful about that, because we could wake up one day, like we have many times in the past, and see this market just absolutely go south. And all it is one situation that will send that market going lower. And then all these other situations will unravel. So again, it's a time to be very conservative. It's not a time to be speculating in the market. Now, a lot of stock traders did very well in 2013, but again, it's out and out speculation, and it's out and out gambling. And if you happen to hit the right stocks, yeah, you did great, but most people didn't. So at this particular point, I'm still very, very worried about the U.S. economy. Again, the unemployment number is not 6.8%. It's much closer to 20%, and 20% unemployment, which is going to get worse, not better, is actually depression-type numbers. Back in the 30s, they had 25% unemployment, and the country was in a depression. So again, please don't be lulled into a false sense of security, thinking that things are getting better in the United States, because they're really not. And when people aren't working, it's literally impossible for the economy to get better, because people are not spending money right now. They're just afraid to spend money. They're not working, and people that have been out of the workforce for years now have just given up looking for a job. Don't forget, back in the 90s, there's a lot of people in the stock market working as brokers and traders and analysts and that type of thing. And the same in real estate. When the real estate markets were on fire, so much of the population in the U.S. were in those two markets. Either you're a real estate broker or a mortgage broker or a builder or a supplier or whatever. And again, those were great times. But those times are gone at this time, and again, what we're going to see is a big downturn in the U.S. economy, unfortunately, and it's going to lead to more people not working, and that is only going to hurt the economy, because really, the economy only does well when the middle class, when the consumers are spending money, and right now that's not what's happening. So basically, you probably have 20% unemployment at this point, but the government's calling it 6.8%. Retail will continue to suffer. They're closing several chain stores, thousands and thousands of people out of work, and then on top of that, because of Obamacare and the huge cost of insurance, health insurance, it's going to cripple several corporations, and you're going to see a lot more people being let go. So this is what we see for the foreseeable near future. This is not years and years away. This is right now. This is happening as we speak. The other thing is that they talk about deflation, but if you look at what's happening, for example, in California right now, California's got a huge drought. They got a massive water problem and a crop problem. Their orange juice crops are almost dying, their beans and their tomatoes and everything else. So again, they could be looking at deflation, but the fact is that as commodities start to go higher again due to weather situations or supply and demand, higher commodity prices are inflationary, not deflationary. So again, everybody has their own opinion on the market. My opinion basically is that for the last several years, due to the severity of the downturn in the economy back in 2008, again with the derivatives market and Lehman going under and the money market funds almost drying up, again, it was a severe situation, and they did everything they could, meaning the government and the Federal Reserve, to right the ship. And they did an excellent job. They certainly have done an excellent job of keeping the U.S. above the poverty line at this point, but everything that they did is going to come back, unfortunately, and bite them, because most of the things that they put in, that they did, that they hoped would work, for example, the quantitative easing, the reason they did that was, number one, to bail out certain companies that couldn't afford to fail, so they bailed them out. And then on top of that, again, you've got a situation where a lot of these corporations now have to work on their own merit, and again, you're just not seeing the business. The business just isn't there. When you put almost $1 trillion a month into the marketplace, 85 billion type of thing, or they're putting 85 billion into the market, almost $1 trillion a year, it should have had a much stronger effect. And all it's done is, in my opinion and many others, is delayed the inevitable, which is the economy is going to sink again because there's just not enough business out there. And what they had really hoped is by putting all this money back into the market that corporations would do better, they'd start to hire again, and that would get the economy back on track. But that just hasn't happened. And in actual fact, again, I think it's pretty obvious that the unemployment rate is really very close to 20%, not the 6.8% that they're trying to feed us at this time. So I do believe that over the short term, if we do see deflation, there's no doubt in my mind that eventually it's going to be inflation that is going to be with us, and it's going to wreak havoc on the market. That's why you still need to be in the hard asset market. Gold and silver prices are holding in there. You know, the fact is that we've seen a heavy downturn in the gold and silver markets from 2011 through 2013. When gold hit $1,900 and silver hit $50, there was very strong reasons why that was happening. And the rally in that market was a real rally. You had the right people in the right market for the right reason. However, in 2011, when the market started to sink, it was for all the wrong reasons. And the real reason behind it is that there just wasn't enough gold and silver physically to feed the ETFs, the exchange-traded funds. And they had to do something because those exchange-traded funds have got to be backed by physical metal. And there was just an impossibility. There was no way that there was enough metal in the world to meet the demands of the ETFs. So what they did is they purposely brought the price of gold and silver down. It's a sickening situation to think that that's actually happening in the marketplace, but it's an obvious situation, and that's 100% what happened. They did it by raising the margin requirements, by making things so expensive to trade gold and silver in the futures market that basically the hedge funds exited the market. And the reason that they did this was because they couldn't match up the amount of paper that was sold in ETFs and other markets like that, and there wasn't enough physical gold and silver. You know, the thing is, they did this back in 1980 also. Most people don't know that, but instead of doing what they're doing this time, what they did back then is they closed the markets for 2 days because there wasn't enough metal to meet the demand of the futures contracts. They closed the market for 2 days, and when they reopened, people got so spooked about it that they started selling the positions, and silver fell from $50 to $26 in about 3 days. So at times, these moves are orchestrated because at times the government has to do things that are not 100% right, that are not 100% illegal, but again, you're never going to be able to fight City Hall. So as we're trading today, gold is trading up $7 at $12.50. Just so you know, the very heavy support for gold is at $11.87. We've been at that number 3 times. It's called a triple bottom, and so far that number has held. So the gold market is trading right now at $12.50, and if the heavy support is at $11.87, that means we've got a $63 buffer in the gold market to where that floor is for gold. And again, it would take an awful lot for the gold market to break below that 11.87 level. So at this particular point, I'm feeling pretty good about the fact that gold is got about almost a $70 buffer. And again, it would be very difficult for them to break that 11.87 level. Very similar with silver. There's very heavy support in silver at 18 to 18.50 in that range, and we're trading right now at 20.42. We're up 22 cents. So gold and actually silver has held in there fairly well, realizing that the government doesn't want gold and silver to go up. It's still holding in there decent, and there is no doubt in my mind and many other people that know this market extremely well, that gold and silver is a place to have your money. Physical gold and silver is a place to protect yourself against what's going to happen within the foreseeable near future. We love the gold market. It's up $7 today, trading at $12.50. Silver market's up 22 cents, back above the $20 level at $20.42. Platinum's up $16 at $14.53. A lot of feeling that the platinum and palladium markets are going to run substantially this year. Palladium, which is the sister to platinum and is in most catalytic converters at a much cheaper price than platinum, is a very strong buy. It's up $5 and it's trading at $7.52. Again, we look at the Dow Jones, and we don't put a lot of credence in what that market is doing because, again, it's a manipulated market, but the Dow is trading at 16,452. And again, a lot of that is based on quantitative easing. There's just no way that people are that bullish on the stock market. The NASDAQ is down 9 points at 42.09. The TSX has been all over the place. One day it's up, the next day it's down. It's trading at 13,872. U.S. dollar is trading at 81 cents. We need to see that market break down below the 78.50 level. We've seen it break 80 cents and stay below that level for several days. So 80 cents is not a major number for the U.S. dollar, but 78.5 cents is. And if we saw 2 closes in the U.S. dollar below 78.5 cents, the next major level of support for the U.S. dollar is 72.5 cents. And at 72.5 cent U.S. dollar, gold was at 11.80 and silver was at $50. That's how quickly this market can change. The Nikkei, which has been up one day and down heavily the next, is down again today another 12 points at 15,733. And the crude oil market, which has been all over the place, which is actually one of my strongest recommendations, is crude oil. We were over $100 2 weeks ago. We dropped down to $91 earlier this week. We're back up to $95 at this point, but there's no doubt in my mind crude oil is going substantially higher. I'm a firm believer that we've got major problems. The fundamentals just don't show that we should be sitting at record highs in the Dow and then the S&P. It just doesn't make any sense. So I'm sticking with the fact that I want to be conservative. I don't want to speculate. And the last thing in the world I want to do is have my money in a market that has plummeted before for the exact same reasons as we're sitting in right now, Randy. So, again, I'm in gold, silver, diamonds, and some cash, and that's where all my money is sitting at this time.
The company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, Worldwide Precious Metals of Vancouver, a leading Canadian precious metals bullion dealer recommended by Harold for over 10 years. They are the experts to trust and work with in this very specialized market. They want to educate you. Education to them is so important. They want you to become a very knowledgeable investor. Start your own precious metals investment account today with Worldwide. All gold is allocated, either wholesale or premium. They're there to help you maximize profit, minimize risk, instant liquidity in and out of the market with just a phone call, 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Now, stored metal is outside the banking system, which is so important. If you do not understand why it is, let Worldwide explain it to you. The metal can be delivered to your door. Worldwide is there, and they have access to the physical precious metals you want today. Connect with them. Their website, wwpmc.com, wwpmc.com. It's an outstanding website. It answers so many questions. Go there right now and take a look around. You can call as well, 1-866-623-2002. Ask about our free weekly newsletter. We have a free weekly newsletter we send out via email. Get your name on the list. It's the companion to our radio show. It's a must-read. You can go through it very quickly or spend hours. Get your name on the list with Worldwide. From our newsletter this week, we have a chart. It's an imperative chart for you to take a look at if you're interested in investing in gold and silver. Robert Fitzwilson, stunning chart shows gold will skyrocket in 2014. The chart below shows the ratio of the adjusted monetary base in billions as calculated by the St. Louis Federal Reserve divided by the price of gold. It provides a clear picture of what has to come before, as well as a strong suggestion as to what lies ahead. The chart also shows what can be viewed as a coiled spring. Suppressing the price of gold will continue to obviously make it take off even quicker when it does. They're printing unlimited quantities of fiat currency cannot persist forever. Either the price of gold has to rise dramatically or the printing needs to be reined in. And given the need to fund the U.S. federal deficit, support other Western banking systems, and significantly weaker economy around the world, the prospect of dramatically higher monetization of debt is more likely than a reduction. And they go on to say that they believe that this is a coil that is waiting to just spring, and they expect much, much higher prices in precious metals in 2014. Get that chart from Worldwide Precious Metals. Get our free weekly newsletter. Let them explain to you why gold and silver are about to take off, and they can do it via this story and chart. Connect with them, wwpmc.com, telephone number 1-866-623-2002. Going to come back and talk about diamonds and an auction Harold has as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on January 17th, 2014. Our time is 9:14 Mountain. Radio show runs on 6:30 CHED in Edmonton. We should remind you that at the beginning of February, we're going to be moving times. We have been on Sunday at 3 for quite a while. Our radio show is moving to Saturday at 3 p.m., our new time, starting February the 1st. So if you listen to us on 6:30 CHED, February the 1st, Saturday, 3 p.m., our new time. Now remember, The shows are archived on Herald's websites, hesradio.com, rarecoloreddiamonds.com. You can stream them there. We have a podcast through iTunes. We are on every portable device. You can take us anywhere you go. You can listen to the radio show on your portable device through iTunes. Type in World Financial Report on Radio. You will find us there. We are podcasted. Harold does daily market commentary on his websites, and you can find that as well on the podcast site. When it comes to investing in gold and silver, there's only one company Harold recommends you use. That is Worldwide Precious Metals. Connect with them at wwpmc.com. Their telephone number 1-866-623-2002. Harold's websites, rarecoloreddiamonds.com, rarecoloreddiamonds.com, and we'll talk about it here in a second, hsfineauctions.com. The next auction is coming up on February the 5th, 8 Eastern, 6 Mountain. Our featured diamond of the week from rarecoloreddiamonds.com. You can go to the website, click on Featured Diamond. You can see the diamond in our newsletter. We have a picture of it. See the video online. It is a stunning 0.17 carat, round, brilliant cut, fancy, vivid pink argyle. This is an amazing diamond. Harold's son, Jonathan, wrote an article a while back, and I did include it in the newsletter for those that might have missed it. From rarecoloreddiamonds.com, Building and Protecting Wealth with Rare Colored Diamonds. And you can find that in our newsletter. Now, Harold, coming up on Wednesday, February the 5th at 8 Eastern, 6 Mountain, H. Siegel Fine Auctions, hsfineauctions.com, he's having an auction. And it's one of those things that people can sign up for. They can go online and sign up. And some of the items we have, and I have the catalog in front of me, people can go to the website and see the catalog or get our free weekly newsletter from Harold, and you can see it. We have some outstanding pieces. We have diamonds. We have gold and silver coins. We have it all. This could be our best auction ever.
I'm excited about it, Randy, and I'm glad you feel that way. We did include in this coming auction some very, very rare coin sets that are nearly impossible to get today, and some of them are my favorites. It actually broke my heart to give them up. But again, the auction business for us is extremely important. It's where our clients will eventually sell their diamonds, and what we're trying to do is build up a large audience worldwide, so when we do start to sell our clients diamonds, that we have that tremendous amount of clients worldwide that are attending our auctions almost on a monthly basis. And that what our goal is have at least one auction per month. So on this auction coming up on the 5th, we are offering, first of all, a beautiful silver ingot, Pope the Prophet of Peace. You can see the certificate of authenticity and the photographs and all the information on it. Then there's a finished numismatic collector coin. It's so beautiful and stunning in person that, again, is something that most investors and collectors would want, so we are putting them up. There's very, very few of those available. Then we have some Australian Koala 2003 proof platinum coins. Platinum is a very, very expensive metal, looks to go substantially higher, and this is a beautiful set that comes in an amazing display case. Then you've got one of my favorites of all, which is the Natura Wildcats of Africa, and basically this is a solid gold collector set, and it's numbered. Very, very few of them have ever been produced, and when you see this particular set, it is absolutely drop-dead gorgeous. Again, I've invested in these, back 20 years ago pretty well, or 15 years ago actually, and again, they've gone up tremendously in value, but these are nearly impossible to get, these sets, especially the older ones, and again, we do have them available at this upcoming auction. And then one of my favorites, and I know it's also one of Randy's, it's a kilo of pure silver coin, but this one is the snake kilo coin, and it's got a yellow diamond in the eye. It's absolutely one of my favorite coins of all time. Again, it's from my private collection, and I put it up because, again, it's such an important piece, and it'll just take your breath away. And when you feel the weight of it, a kilo of pure silver, 0.999 silver, is just something very, very substantial. Then we have a 25-point round, brilliant, fancy pink argyle. Just look at the GI reports and videos on these diamonds. They're spectacular, magnificent. These diamonds are all from my personal collection. The 31-carat oval. I love ovals. Fancy, intense pink argyle. The video's there. The GIA report is there. We've got a 31-point round, brilliant, fancy, intense purple pinks. As we all know, the rounds, the ovals, and the emerald cuts are the most difficult to get, and there is a premium to those particular cuts. A 33-point fancy, intense purple pink oval, just stunning. The videos on these diamonds and the colors are magnificent. There's a 33-point round, brilliant, fancy purplish pink, and then we're offering a 35-point cushion cut, pure fancy orange diamond. Just so you know about orange, orange is considered one of the rarest colors that you could ever get. Orange is a combination of yellow and red is the rarest of all diamonds. However, many experts will say that it's actually the orange diamond and the pure purple diamond that are the rarest because there's so few of them. So this is a 35-point. It's a third of a carat. It's a cushion cut, so it looks like it's almost a carat. It's a much larger diamond because it's a cushion cut. It's got the rounded sides to it, and the color on it is spectacular. It's pure orange, one of the rarest diamonds in the world. Even though it's a smaller diamond, you'll never ever see a diamond like this. And again, orange really came to the forefront about a month ago when a very famous orange diamond that was originally purchased for $2 million was estimated to sell for $17 million, ended up selling for $35 million, and then 5 minutes later was sold again for $40 million. That was a vivid orange diamond. So to get a pure orange diamond today is nearly impossible. I would imagine that this would be one of the diamonds that will be the most contested for. Again, it's a nearly impossible diamond to get. Then we get into the bigger diamonds. The 40-point round, brilliant, fancy, intense pink argyle will take your breath away. A 43-point radiant cut, square cut diamond, magnificent, intense purplish pink. Again, just stunning. There's a 45-point round, brilliant, fancy, intense purplish pink that is stunning. And then we're going to have 3 rings up. There's one up now, but there'll be 2 more up by the end of today, Friday, as we're taping the show. One of them is over a carat. It's a 1.01 heart, fancy, it's a light pink diamond ring. The color is almost bubblegum. It is so beautiful, and that particular diamond is going to go for a fantastic price. And we are putting up 2 other diamonds by this evening that will be available also at the auction. One of them is a vivid yellow center diamond surrounded by pink hearts, pink flowers. It's absolutely magnificent. So this will be a spectacular auction. It's actually going to be on February the 5th. It's going to be at 8 o'clock Eastern, 6 o'clock Mountain. We will have bidders from all over the world bidding on these diamonds. And again, it should be a phenomenal night. I'm extremely excited about it. The other thing that's going on in the diamond market at this point, and as the old saying goes, when you buy the best, you always get the most back for it. The best colors in colored diamonds are vivid. So the vivid yellow is the hardest yellow diamonds to get and the most expensive. And the fact is that very, very few dealers have any vivid yellow diamonds that are flawless, and that's what we specialize in, is flawless, the highest grade diamonds. Now, the fact is, I was speaking with my cutters just the other day, and they were saying that there's so few vivid yellow rough coming out of the market that the prices have almost doubled in the past 2 years. So if you're fortunate to own a vivid yellow flawless diamond through us, your diamond has not only gone up substantially in value, but the next 2 to 3 years are going to be extreme. We're going to see such huge increases in the price of these vivid yellow flawless diamonds because, number one, there's very, very few of them to be cut because the rough is almost non-existent, and number 2, we're really the only dealer that has any of them, and there's in very, very short supply. The prices of those vivid yellow flawless diamonds are going to skyrocket, and if you happen to own one, congratulations to you. And many of my clients own them. We were so fortunate for the past 10 years or so to have been able to produce these diamonds, offer them to my clients at excellent prices, and now the prices have just skyrocketed and will do so again. In the month of February, we should see a huge increase in the price of vivid yellow flawless diamonds, and we're the only dealer that has them. The other diamonds that we're going to see another massive increase in are the vivid pink argyles. And the vivid pink diamonds in general, they're nearly impossible to get. Again, we're the only dealer that really has them, has any supply of them, and we have about 20 more coming onto the market. And again, these diamonds in February are going to go up substantially. The problem that we have at this particular point is the Canadian dollar. The Canadian dollar has weakened tremendously over the past few months. It wasn't that long ago that the Canadian and the U.S. dollar were pretty well even. In fact, there was a time early last year that the Canadian dollar was worth more than the U.S. dollar. But because diamonds are priced in U.S. dollars at this particular time through us, what I did, because, again, I do trade the markets and know the currency markets extremely well, is that I hedged the U.S. Canadian dollar. And the U.S. Canadian dollar, there's a 10% or a 9% difference now between the Canadian and the U.S. dollar, with the Canadian dollar being the weaker currency. That's a concern to us, obviously, because, you know, the Canadian dollar should be a much stronger currency than the U.S. dollar. But it isn't at this point, and I would imagine that the reason for that is the Canadian government is more concerned about exports than they are about anything else at this point. So the Canadian dollar has fallen. However, noticing the trend in that market, I hedged the U.S. and Canadian spread, and here's what I'm willing to do for all of our Canadian clients. For the next week, starting next week, we will offer any of our diamonds, especially our vivid yellow flawlesses and our vivid pink argyles, but we will offer those at Canadian dollar prices. Means you're going to save about 10% on the currency conversion, and we're going to take care of that for you. I was very fortunate to have put a hedge on and was able to buy the U.S. and short the Canadian, and we made enough money on it that we're able to help our clients and basically absorb the entire loss of the Canadian dollar. So again, what you're going to be able to do is buy any of our diamonds during next week, and it's only going to be for next week because I've taken the hedge off. So basically, you're going to be able to buy next week any of our diamonds at Canadian dollar prices, and that's going to save you about 10%, which is extremely substantial in this particular market. So not only are these diamonds going to increase in price substantially in February and March, but we're also going to give you the break on the Canadian dollar and charge you Canadian prices as opposed to U.S. prices. And again, I think that's fair, seeing that we are very fortunate to have been able to hedge the market correctly and made enough money to be able to offset the losses in the Canadian dollar. So everybody who's on the fence right now, everybody who's thinking about getting involved in the diamond market, next week is a week that you're going to be able to buy our diamonds at Canadian dollar prices, and that's a huge, huge discount for our clients. On the other hand, Randy, I'm extremely excited about what's happening in the diamond industry. Starting out in 2014, we've been asked to be on 2 major radio stations in the United States, and several more are lining up for interviews with us. No matter what, the rare color diamond market is one of the best markets to be in. They never, ever lose value. Certain diamonds increase by anywhere from 15 to 40 to 50% a year, depending on the color. You know, these vivid pink argyles, the closer we get to the mine closing down, which is only 6 years from now, we anticipate that vivid pink argyles will be 10 times the price that they are today. And again, these diamonds are nearly impossible to get. So while we still have them, and just imagine what's going to happen when there is no supply left of vivid pink argyles and vivid yellow flawlesses. What do you think is going to happen to the price? The fact is that these are the most diamonds that are in the most demand, and these are the diamonds that, fortunately, I invested in heavily enough over the past several years to have a supply of them. The most important thing is that my clients make money. Again, I get very upset when certain situations are happening in the markets now, that we know that we're right about the market, but because of the manipulation, the markets have gone against us. That is not going to last forever. The trend is always your friend, and the market in gold and silver is not only going to come back, it's going to come back and make new highs that is going to shock everybody. The same thing is happening with diamonds. The fact is that there's a massive shortage of these diamonds, and we have to supply them because we were fortunate enough to invest heavily in those markets over the last 3 and 4 years when they were available. So again, just to reiterate, next week only, you will be able to buy any of our diamonds that's on my website through rarecoloreddiamonds.com, and instead of paying American dollar, which is 10% higher than the Canadian dollar, we're going to give it to you at Canadian dollar prices because we're fortunate enough to have hedged that market. So that's how we're sitting right now, Randy. The diamond market is on fire. We can barely keep up with the demand, but to me the most important thing is that my clients do well, and I want to make certain that next week we get our clients that are interested in buying diamonds in a very, very good position, especially with the vivid yellow flawlesses and the vivid pink argyles while we still have them.
Our featured diamond this week is a .17 carat round, brilliant cut, fancy, vivid pink argyle. This is nature's art, nature's rarest art, and somewhere down the line when the argyle mine closes in the next 5 to 6, 7 years, how much is this going to be worth? We do not know. One thing we do know, 90 to 95% of the world's pink diamonds come from the argyle mine. That will all be gone. Get our free weekly newsletter from Harold. Connect with him at rarecoloreddiamonds.com. Speak with him personally and privately at 1-800-432-1022. Get our free weekly newsletter from him, rarecoloreddiamonds.com. Building and protecting wealth with rare colored diamonds, a must-read article. When you're considering investments, consider rare colored diamonds. And go to the website and sign up immediately. H. Siegel Fine Auctions, hsfineauctions.com. Wednesday, February the 5th, there will be an auction, 6 o'clock Mountain, 8 Eastern, and Harold ran through some of the items. You can see the catalog for yourself in our newsletter. Get our free weekly newsletter from Harold. He'll be happy to send it out to you as well. You can go to the website and scroll through and take a look for yourself. I know those Pope Prophet of Peace, those silver ingots are going to be much coveted because this is Pope John Paul. So this is a rare one. And one of the items that Harold mentioned, and this is something that, yes, I do love, and that is that diamond eye eagle, actually eye snake kilo coin. And the reason it's important is my zodiac for the Chinese zodiac is snake, so is Harold's. And those coins are simply outstanding collector's pieces if you're a year of the snake baby, as Harold and I are. And Harold, I know that when we offered those in the past, for those that are in the zodiac, the Chinese zodiac for the year of the snake, those went very, very quickly.
They certainly did. And I display mine in my home, actually, along with, I've got another kilo coin, the Libertad, that is also a kilo and is just absolutely beautiful. So when you see these in person, you just won't believe. And when you feel the weight of them, they weigh 2.2 pounds. They're 1 kilo. They're just absolutely the best. So again, this is going to be a very enjoyable auction, an awful lot of fun. Please make sure that you sign up for it. You go to hsfineauctions.com. Fill in your information, and then you will be able to attend the auction. And it's virtual. It's from your own home. It's the most amazing thing because you can sit in the comfort of your own home and attend this auction. You can bid on the items if you want, or sit back and watch. Many people do. But the fact is that we're getting a larger and larger and larger increase in bidders, and that's what our goal is. We want clients from all over the world to be attending our auctions, and fortunately that's what's happening at this point. So again, we're very excited about it. Go to the website this weekend, take a look at everything that's going to be auctioned off. We'll have all the estimates and everything up there. So, again, we want everybody to attend and have a great time, and there's going to be some great deals there also. So, again, it's your time to be able to get into the rare diamond market and the rare collectible market from the comfort of your own home with our virtual auctions. It's very, very exciting.
And Harold, we should remind people, if for some reason they've heard this date, Wednesday, the 5th of February, and go, oh, no, I've got this important event, you can still take part. And this is something that you recently put in place. Explain it to those that would like to take advantage of it.
Yes, what we have is that we have the opportunity that you can actually place a bid, an absentee bid. And we built this into our system, and it works extremely well. So what you are able to do is actually go onto the website, and if you're not going to be able to attend the auction, figure out which items you would like to bid on and put on an automatic bid. And again, it works perfectly. You know, we have clients in China, Australia, all over Europe, and at times, because of the time difference, they just can't attend. So it's a perfect scenario for them to be able to still participate in the auction without even being there. And again, I'm so proud of our auction business and our auction site. There's nothing like it in the world. There's never been another product like it. And again, it's the only live auction site where we get to sell the products live, which you need to do. A diamond can't just be sold like at eBay. I know it can be sold, but you need to know about it. There's so much more to diamonds than just what meets the eye. And that's why we educate our clients. In fact, we have a learning center where you're actually going to be able to go on our site. It'll be up next week. You're going to be able to view the historical price tracker. You're going to be able to view our new video. You're going to be able to learn everything about diamonds. And then, we're almost finished this, you're going to be able to take a course with us to learn about diamonds, and you'll actually get a certificate at the end of it. So when that is available, which will be within the next week, make sure you sign up for that and make sure that you take that course, because an educated investor, to me, is extremely important. There's so many variables when it comes to investing in diamonds. It's not just what you read off of a GIA report. It's much, much more than that. So again, we want you to make money with us. We want you to be in the right markets. And again, we're going to educate you and give you the information you need in order to make an intelligent business decision.
And keep in mind, you're looking at over the long term, diamonds appreciating at about 10 to 15% per year over the long term. Those are some of the numbers that have come forward for those that have been tracking the appreciation numbers. As well, it's a concentrated form of wealth. It's a storehouse of value. When you have a diamond, it's not a piece of paper or a computerized record. It's not some crazy hedge fund, or it's something that you have in your hand that has stood the test of time. And it's obviously, because it's diamond, it is very, very strong. Collectors' cars or art pieces cannot promise that. We're talking about diamonds, and they're better than cash because it's a storehouse of value for thousands of years. You could have in your hand diamonds that would equal the value of hundreds of Rolls Royces. And unlike a stock certificate or T-bill or an investment, this is something you can enjoy at the same time, as we've spoken about before. Put it around your neck, on your lapel, on your finger, on your ears. You can enjoy this investment. And for some people that like the investment of jewelry and diamonds, that is the ultimate high for them. They walk in a room, and it's not so much how much the investment is worth or the jewelry is worth, but it's the reaction that it's getting. And Harold, we have about a minute left, and one of the things that you see all the time with your wife, Harriet, is the reaction that people obviously have towards her and the diamonds that she's wearing, and that is just something that's priceless.
You bet. And again, she's having an awful lot of fun because, I've got the last 8 pieces of Elizabeth Taylor's estate. We're just cataloging it, but I also have the Van Cleef and Arpels collection circa 1930. I did have the Cartier collection, but we sold that. sold the entire collection. So now we have the Van Cleef and Arpels and the Boucheron, two of the most amazing collections ever. And then we have the the Elizabeth Taylor collection, which again is probably the most sought after collection there is. On top of that, our diamonds are second to none. This is where a lot of money is going. Don't forget, diamonds are selling for record prices everywhere. $85 million for a diamond last month and $35 million for another diamond. People don't spend that kind of money to lose money. So again, these are great investments, and believe me, they're so beautiful. To put them into jewelry and wear them, then give them back to us to sell is a very smart thing, and the women just absolutely love it.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. Next auction for hsfineauctions.com. Go to the website now, February 5th, 6 Mountain, 8 Eastern. And speak with Worldwide Precious Metals. It's about starting your own precious metals investment account. www.pmc.com. Telephone number 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.